check. There he is.
Hey, where'd you go? Where'd you go? Hello, hello, hello. Can we match our head heights?
Buddy, I'm gonna, stat is like this, whatever angle, this, okay?
Whoosh! Yeah, I'm gonna have some
Oh.
fun, baby.
Both.
Everything's insane.
Either or and. So I got some stuff to talk about.
Yeah.
10 offers last night, Daryl.
What?
I thought the market... What's going on? I thought the market was crashing.
10 offers on the same property?
On the same property, and I'm on the buyer's side.
Hold on. You got 10 offers? And you're on the buyer's side?
My buyers had to compete with 9 other offers, and we lost.
And you lost?
And we lost.
For what? What were we bidding on?
It was a 4-bedroom house in Richmond Hill. It was a nice property, well maintained, lovingly cared for, lots of updates and renovations, and there was 10 offers, and it was the lowest price house in that part of Richmond Hill. All the other houses were priced well above, so it attracted all the people, and everyone came in, and we knew. We went over asking, but it wasn't enough.
It wasn't meant to be.
I don't even think we were close, okay?
Not even close, really?
I don't think we were close. I bet we were off by at least 100,000.
Doesn't House Sigma say it already?
House Sigma said it was worth $1,336,000, and we bid 1.4, and we lost.
But you didn't base it on House Sigma, did you?
Never.
Why
would you ever look at House Sigma? But anyways, we lost. That's the main thing. There was 10 offers. It was a good property. Sales were 1.5 and above, but they were like larger, not as nice, that kind of stuff. So I thought maybe because it was a little bit smaller, it would detract people, but it wasn't. It was well kept. Good renovations, 5 years old. The guys did a really good job. It was spotless.
I was on Twitter this morning for a change, and I was looking at our friend Donna Backer's tweet, and she was talking about how she all of a sudden heard from a client that they had heard from their lawyer that the mortgage company, I guess, left the file on their desk and couldn't put the mortgage together in the few days that it's supposed to close in. And so that they were asking for an extension, which kind of sounds a little strange that nobody was
It's not my fault.
working on this thing.
It was the underwriter. He said it was underneath his little, perpetual motion machine, and he just couldn't see it. It was on his desk, but he was memorized.
Mr. Potato Head. That's where I left it.
My daughter made me this, Mr. Potato Head sculpture.
Story. I mean, we know that it's our fault, but you should get another 4 weeks on your closing date, because that obviously makes the most sense. We can't put this together quickly for you because
and a price abatement.
No, that comes next, TK. One thing at a time. Come on. But this is not unique to this is happening all over the place. Isn't this like a problem?
What?
People are, I don't know. I feel like people were walking away from deals and bailing.
I put a deal together last night. The guy got a appraiser in. It was one of my listings. He got the appraisal in. So Monday we put the deal together. He had the appraisal there by Friday. He extended it 2 days because they were getting his approval done. So it was supposed to be Monday, the condition, but he extended it till Wednesday, and he firmed up last night. He got it done. He had the appraiser in. Everything was fine.
Forget about firming up on the
And he did the
offer. What about
inspection.
the money? How quickly can they get the money? Because these people are supposed to close in like 3 days. And all of a sudden it's like, you need a 30-day extension because we can't get you the money.
The banks want to lend money. They know what's going on. Okay.
So this is a scheme. It's a scheme. Why? Why are they scheming?
They have the money, Daryl. They have the money. It's either somebody was telling a story, right?
Yes,
right.
That's
Someone
what I
was telling a
figured.
story, or in the event it was an honest mistake, there would be unprecedented amounts of evidence that the banks would provide.
Well, I would think they'd have the
Right?
ability to throw it together quickly if it's their fault. Because I mean, imagine the cascading effect that could take place because this person left it on their desk for 7 weeks.
Yeah, doesn't happen.
Oops.
First of
Oops.
all, this is like a hypothetical desk, right? Because files are all digital.
Right.
So first of all, there's no desk,
There's
right?
no desk.
So that's the one,
The kitchen
little
table nowadays.
clue as to really what's going on here. But who am I? Who am I, Darryl? We're just two YouTubers
What
who
do
happen to
we
know
know?
nothing about real estate.
But listen, it's weird out there because okay, I feel like everything was falling apart a couple of weeks ago, and now all of a sudden you're in bidding wars. Other people are talking about bidding wars. I read somebody put up a tweet that somebody got 10 offers and they didn't even take any of the offers, which is
Whoa!
crazy. And then all of a sudden, a week later, I think the price was reduced. We have inflation in the USA down. This episode is brought to you by Lenlord.
This Lenlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer. We have inflation in the USA down from last month, and everybody's thinking, oh my God, like it's rolling over. Inflation is gone. It's done.
Yep.
We have interest rates actually coming off at some banks right now, ticking a little lower on those interest rates.
Competitive.
What the fuck is going on right now? Like this is too strange. We need to figure this out, TK. Is this a good time to buy a home? Is this a bad time to buy a home? Is this a good time to invest? Like what the fuck is going on? Last week, people couldn't even get showings. This week, there's 10 people in a bidding war that's going over. Ooh, this might be the new metric that we use, the House Sigma BS price.
That's what we talked about before, remember?
Yes.
Who can beat the algorithm? There's something called a false bottom, right? Which exists when there's a bull trap where everybody feels like things
bottom.
Right? Everyone thinks that everything's going to get corrected again. And so they all rush in and that, it's done now. It's all coming down. And, you never really know until it's all over. But, definitely I said it once, I'll say it twice. I'll keep saying it. There's a ton of people out there who want to buy real estate. And look at that city in the background. Look at that beautiful city.
Look
in
at
Vancouver.
how much room there is.
I heard it's beautiful out there. I heard it's beautiful out in Vancouver. Mountains and oceans and all sorts of good stuff. Casinos.
So is it a good time to buy real estate though? Because things are all bananas all over the place.
I think that let's talk quickly about.
We had bankruptcies go up also. Like there's all kinds of weird signals going on. We got bankruptcies skyrocketing. We got interest rates starting to tick down in some places. We've got unemployment like starting to tick up again. Like I don't understand. And now all of a sudden there's bidding wars all over the place again. Very confused, TK. More confused than normal.
That's right where we want you. Otherwise, real estate agents would be replaced by robots.
Robots sooner than
the later. The demand that I'm having right now from buyers is real demand. Any speculators are out of the market. Anybody who's considering, quick flips. Anybody, you can tell that in some of the pre-construction numbers. Anybody who's looking at, secondary properties and all that kind of stuff, they're on pause. They're waiting. They're prepared. They got money. They're just itching for that moment when they can jump back into the market. But there is real demand out there. Domestic, organic demand. People who need to be in houses. And thankfully, the number of listings out there has not spiked. In fact, there's record numbers of cancellations, which is hard to tell which ones are canceled and relisted and all that kind of stuff. But bottom line is more cancellations means there's more people pulling their houses off the market.
Active listings are going down. They're going down from month to month. Which it doesn't matter if
month to
they're
month,
canceled
month to month.
listings and relisted. Yeah, month to month, they're down.
Not as fast as the sales are, right? So the bottom line is this inventory is still building up,
Piling up.
but it's not a point where we're going to have, 7 months of inventory. It was interesting because I heard a realtor talk who's in a US market about when a buyer's market is, and he was talking like seller's market's 3 to 5 months, buyer's markets 6 or 7 months, like he was talking about a balanced market being like 5 months of inventory, right? But in Toronto, it is different, right? It is different. For us to get to a buyer's market, you've got to be somewhere north of 6 months for sure. But you definitely have to build up a lot more inventory than we have, right?
This can't be over yet. It's too soon. Even for my prediction, it's way too soon. So I don't buy any of this stuff going on. I don't know what the hell's going on, but I don't like it. But you know what I do like, TK?
What is it? Tell me.
Tools,
Whisper it.
tools that help me figure this shit out.
So good time to invest real estate is when
it makes sense for the people that you have raised money from.
Good. Because if I had a property that made me $60,000 on a flip, or $3 million on a development site, or $1,000 a month cash flow, or whatever you're trying to do in your head, whatever your goals are, right? Like everybody's different, and that property's in front of you, and it's there, like you've secured it, it's yours. Are you all of a sudden going to say, well, I might be able to get it for a little bit cheaper if I wait 6 months? Okay, it's possible, right? It's also possible that deal doesn't exist in 6 months because when you are ready to come back into the market, everybody else is as well, right?
Sure.
There may be some other factor that comes in where, right now you're able to secure an interest rate at X, and that is going to meet all your criteria. Maybe there's going to be investors who are lining up to work with you because there's no one else who's willing to take the chance on, a certain deal. Maybe a seller's more motivated because they're afraid because what they're reading. Right? So always analyze your deals. There's never a bad time to invest in real estate. Like literally, like every major and big player, professional investor will tell you this, that there's no market that they can't make money in. It's just, you have to change the game.
There's no deal that I've ever worked on that people didn't think I was crazy for buying at the beginning.
Yep.
But like all of a sudden, even people that would say, nah, you know what, I don't like it at the beginning. Eventually, once somebody else bought it from me, everybody was like, oh,
begging.
That's like the best deal. What else do you got?
Yeah,
Anyways, we have our friend Avi from Lenlord joining us today.
Love it.
He has been waiting patiently in the green room. And there he is. Hello.
Avi, how are you?
Guys. So should I change the background?
No, it's perfect. Unless you've got like a beautiful shot of Israel behind you and the beach, then it's perfect how it is. Next time. Well, welcome to the show, mister. Do you want to give the few people that are watching right now a brief introduction as to who you are, our lovely, wonderful sponsor?
Sure thing. Yes. So hi, guys. So I'm Aviram, co-founder and CEO at Lenlord. Lenlord, as you know, or you are going to know now, is a software. We are like an online platform, and we have property investors and landlords to do three main things. One, to invest smarter. So when they use our platform, they can source properties, they can analyze potential deals for like property acquisitions, and also get some market data. So basically with this information, they can make better decisions and see the numbers if the deals stack up or not. And basically based on that, they can decide if to move forward or not. After they acquire the property, they can manage the investment on our platform. Or if or we have users that are existing landlords with large portfolios, so they can manage their investments, they can manage the cash flow, so they can see the performance of each property, and also they can see the finance situation of each property, of the entire portfolio. and again, make decisions based on data. So basically we have them to run and grow their property business. And the third thing we do is finance. So we help our users to get mortgages and also to get access to short-term loans, hard money loans, to finance new purchases. And everything is in one place. So you have like one platform to manage your existing investments, find new opportunities, and get finance to grow your property business all in one place.
Amazing. Amazing.
Yeah,
And this is
amazing,
something
amazing tool.
that's consistent. So you guys are already, you know, very large scale in the UK,
Right.
right?
Yes.
So this is something that's been proven where you've been able to reach, you know, a large number of landlords already there. What other countries are you in?
So the UK is our main market right now. We have thousands and thousands of users on the platform. We have some activity in Germany, and also now we started activity in Canada.
Mm-hmm.
Very, very
The place to be. That's why
smart,
you're on the
place
Canadian
to
Real
be.
Estate Show.
That's right. So before we kind of get more into the platform and show people how it works, we want to get to know you a little bit. We want to talk about real estate. We want to know how you kind of got into this business. So maybe let's start first with what's your background in real estate? Why did you choose to jump into this arena?
Okay, so I have a mixed background, I would say. So I have background in real estate, mainly from my parents. They are landlords in Israel. They own, I think, quite large portfolio of like rented properties. And also myself, I have like two right now. So it's not my main thing, but it's always something that I was interested in and saw it, you know, from my parents. And my other background is from the software industry, like high-tech industry in Israel. So I've been working in the software industry for over 20 years. I performed senior roles in startups and high-tech companies in the fintech area and in the e-commerce area as well. And I knew that I want to do something that is related to finance. And if I can also connect it to real estate, it's just like another thing that I'm very interested in. It would be great. And what we found when we just launched, like founded Lenlord, is that there is a real problem for, so it's not so easy for real estate investors and landlords to get finance, mainly if you have, you know, so many options, or if you have large portfolios. So then basically you need to understand the players, you need to understand the criteria of each lender, you need to understand what is the best product that can help you finance a specific deal or to grow your portfolio. And then we say, okay, there's a great place for technology to make it easier for everyone. And for me, you know, the finance side was something that I had, you know, the experience from my previous company, and I thought that it's a great idea to combine both things together.
Was this the original idea? Like that was the business plan is the platform itself today, more or less, or were things added on later on?
Yeah, so it's fine because yes, the initial idea was to help them find finance. This is like just like to help property investors to get finance.
Yeah.
But what happened when we launched the product in the UK, we realized that we need to collect data. So then our users started to use the platform to manage their data and to manage their current investments and to manage their cash flow and define due dates and reminders and things like that. So then our focus shifted to build a great platform for landlords and property investors to manage their investments. And then we put the finance aside for a year. And then once we got the scale and we got the users and we got, you know, like the engagement, then we started to introduce again the abilities to understand the finance options they have based on the data that they enter to the platform.
So you started off wanting to provide the info for the financing, and as a result of needing all of the information to get them that financing, you realized you had all of this information that you could create a tool with.
Yes.
And then the tool ended up being the main platform. So that's like Canadian Tire. Like, who buys a tire at Canadian Tire, TK? do they even sell tires there still?
I think they've got tires, right? I think
They
so.
may
In the
still
back.
have tires in the back
back.
that no one buys. But the point is that, you know, it's amazing where you start a business and you end up, and I mean, you're still just kind of getting rolling. So who knows where you end up from here. But so tell me, and I think everybody wants to know, but especially me, what is so amazing about this show, the Canadian Real Estate Show, that attracted you to be our first sponsor and to help you grow this business in Canada?
It's a great question. So I think that when we started to research the Canadian market, we basically explored like who are can be like potential partners for us. And we found your show on YouTube, and we really liked it because you are funny guys and very experienced. And
TK is the funny one.
Daryl's the better looking one.
Yeah. And especially the knowledge and guests. So basically, I think that your audience and also we as a software that wants to understand the Canadian market can learn a lot. And we've always believed in content. I think we started in the UK, our partners are content providers. And now like some of our partners also have YouTube channels that they provide great content for property investors and landlords. I think that today with YouTube and also, you know, like all the podcast platforms, it's easy to get, I would say, access to free knowledge and, you know, learn from experience of others. And I think for software is the same because you need the feedback. We've built Lenlord based on feedback, you know, like we always speak with our users, we get feedback on the chat, and we understand what are the features that are, you know, more important for them, what should be the focus on what we should develop. And for us also, like a show like yours we can learn from you. And I think that we can also provide your audience platform that they actually can implement some of the things that you discuss, or they can start using technology to do better. I think that digitization, we call it the digitization of the landlord life. So if you start using more and more technology, then you can get advantage in the market. And it's not just, you know, software like landlords. There are many other solutions that can help landlords and property investors do better.
Definitely. Yeah. And we've seen a huge growth in that just in the last couple of years, right? Everybody's really looked for, I had an example the other day that I was thinking about, but it'll come to me. But everybody's been looking for a way to be able to incorporate technology, right? And that there's a lot of, you know, old school or how traditional type of business models, right? Where they're not relying on technology. And the ones who are succeeding today, the ones who have the fastest growth, the ones who are being the most efficient, the ones whose profits are the greatest, are all leveraging technology. There isn't a single one that will tell you, oh, we don't worry about technology. Every single one of them, that's part of their business plan, is to leverage technology.
Yeah. And so when they approached us, which we had a few people approach us in the past, when we looked at the platform and I went on it and I put one of my properties into it to try it, I was like, holy cow, like this is for real. This isn't one of these other losers that tried to contact us that doesn't make sense for the show. And TK and I really, you know, we didn't want to just be advertising or sponsored by anything. Like we wanted something that would be really actually useful and helpful, not like some of the bullshit that some other people
would benefit from. Yeah,
that our listeners would benefit from. And this was so perfect. And then when I watched one of the webinars that you guys host, and I went into one that you were doing in the UK, because I mean, I could only do so much in the system on my own, right? While just kind of messing around with it. But when I actually saw what it can really do in the background, I was like, wow, this is a really serious thing. I think we would benefit from each other we would learn a lot from this thing, and our followers would definitely benefit from this. And obviously, your growth in Canada benefits you. And I think it was there's a really good synergy here. So we're really happy to have you as a sponsor. We thank you so much. We really appreciate the support. That's for damn sure. What TK and I were talking about before you joined us, and there are some articles out in Toronto recently and in Canada, and a lot of people are talking about, is this a good time to purchase an investment property? I know we've talked about it a bunch of times.
I have a question first, Darryl, because we're pretty sure of the answer already, Avi, but we just want to know. Toronto real estate market, right? Everybody in Israel is talking about the Toronto real estate market, right? Like it's the most important market in the world. Am I right?
Yes, you are.
I'm not sure if I believe you. That's how it feels here, is that
many for sure.
This is what it is. There's nobody cares about anything else, right? And obviously Vancouver and New York and everybody else has got these large, expensive markets that, people are interested in, right? London, UK, and all that kind of stuff. But it's safe to say that most markets in the world right now are operating in a similar fashion.
I agree.
Right?
Yes.
Is that with the rising interest rates, cost of living, asset inflation over the last couple of years, there's a lot of changes that are very similar in each one of the markets, and that anything we talk about here or that you could tell us about in any other markets that you're familiar with is all fairly similar right now.
Yes, I absolutely agree. And I think, if you look in my best experience in the UK market, and you see that the metric, the economy metrics are quite the same in many areas right now. And the things that what we see right now in the UK market from our users is that even though the interest rates are rising, the inflation is going up, there's still demand for properties. I think that the balance in the market hasn't changed. And because of that, as long as there is demand for rental properties, I don't think that we'll see the prices go down. What we do see is that prices are starting to be more stabilized. I don't think that what we saw in 2021, there were areas that the prices went up by 17, even to 20%. Just today, we reviewed a deal. When we review a deal as a lender, because our platform in the UK right now lending money, we take a look on the property, on the borrower, but also on the area. So they took a look in a postcode today that in 2021 went up 17%. And what's interesting, in the last 12 months, into 2022, it went down 1.7%.
Mm-hmm.
So it means
they're lucky compared to here.
Yeah,
that's a week right now, and that's a week here.
We had a higher growth, right? We had 30+% growth year over year in Toronto, and some areas 50%. So they're the ones who've now corrected back to a more reasonable.
What is the correction right now in Toronto, in Vancouver,
in the GTA? Just in the last 5 months, you're somewhere between 20 to 25%
down.
Yeah,
and that's actually one of the lower kind of pockets. Some pockets are down more than that.
Yeah, but across the board
right now. So we don't see it right now, not in Israel, and also not in the UK.
Yeah,
we see some declines. We see some areas that are not growing anymore, but it's still quite stable.
UK, the interest rates are much lower, aren't they? Didn't they just raise them recently for the first time and barely even raise them? Weren't they at zero for the last 12 years or something like that?
Yeah, but it started. Yeah, they started to increase it. So I think that the last 2 weeks ago, if I'm not mistaken, was 0.5% up.
Yeah, and
there was another increase 1 or 2 months ago. I think that this is the global trend. I think all the interest rates will continue to go up.
Right. So they're a few months behind us, though. I think, right? They're 5 months behind. So they went up 0.5 point and crashed, right?
Yeah, Yes, interestingly, but if you look at the mortgage rates, so I know in Canada, you see like it's rising. In the UK, like this week, we saw decline interest rates. So interest rate went down. And
Same
you
here.
can find now, like today I looked at 2 years fixed rate for 2.6%. And like this was the first one. The second lender will like offer like 3.2.
That's a
And
big
this is
spread.
because, yeah, so you have in the UK market many buy to let lenders, and specialist lenders, especially in rental properties, and they have also cash to deploy. They have competition, so this also push them like to be more competitive, even taking into account the rising in interest rates, because the interest rate is still like historically is quite low, so they still have some margins. And in the UK, the way it works, so if you take it for 2 years, a mortgage, you will pay fees, so you pay like 2%. It can be max, I think, around 2%, and then you will need to renew the rate after 2 years, and if not, the rate will jump to I can check to 6 or 7%, and then you pay again the fees. So it's like another way for the lender to generate income. So all the refinance, and in the UK, it's very built in. The refinance, the remortgage is basically part of the process. So you know that you will need to refinance in 2 years or in 3 years or 5 years. But this is the way it's structured. 90% of the mortgages are basically.
So they're planning to stay with the same lender and refinance at new terms.
Yes, so you can stay with the same lender, and then it's a very quick process, but you will need to pay again the fees.
Yeah.
Or because the early redemption fees at this point are 0, you can go and like take another like to do a remortgage or refinance with a different lender as well without penalties.
Yeah, especially investors, right? Investors are always going to be looking at ways to improve their performance. So, shopping around rates afterwards, having a good mortgage broker, dealing with different people, that's typical, right?
Yes.
I find people who are just more, laid back, they just want sort of long-term commitment, loyalty to their branch, whatever it is. They'll stay with the same lender for 20 years, but most investors are looking at all their options.
Switch
Yeah,
for $50 a month. Why not?
Unless you're dealing with stuff like, you got like Scotia Bank, which has got some like high net worth type of stuff, right? But the average mom and pop investor, right? Where they're not looking at owning 20 properties or something like that. They want to have 3 or 4 or something like that. And they can get that from any one of the lenders.
Sure.
Yes, I agree. What we like, by the way, if you use Lenlord, so in our UK version, soon in Canada, our engine basically scan your portfolio and scan the market, and then based on the changes in the interest rates and based on the penalties that you have on your current product, the platform will offer you refinance options. So if now there is a product that the lender that decreased his interest rate, and your penalty position right now still worth is for you to remortgage, then you will get a suggestion from the platform, and you can do it. Everything you can do online. So you can basically remortgage and start the application online, track the application online as well.
Yeah, and people lost a
That's the
ton of
part I
money
love the best.
when those rates were low and people were looking, because everyone saw these in our market, Avi. It was like a 2% 5-year fix. That was like the golden goose, right? And people saw that 2% 5-year fix. We all knew, but anybody who called their bank and looked at what it would cost to change was like, oh, it's 5, 10, 15,000, whatever it is, and they thought, oh, that's not worth it. But if they had and paid that penalty and locked in, the savings over the next few years based on where rates have gone is like thousands and thousands and thousands of dollars that they would have had if they had just made that change, which you don't know because the numbers are difficult. You're not always crunching them. People get worried. But if you have like an analytical tool that's actually going through every detail of your file and saying, look, this is actually what you want to do, because over the next 5 years, this is how much money you save, they might believe it a little bit sooner and take advantage.
Yeah. So why don't we jump into the platform for a little? We put together a little deal to analyze here in Ontario. We put a couple of deals. We're going to see if they make sense from an investment perspective. We've got some houses that are currently on the market. We've got some sales comps. We've got some rental comps, and we're going to plug them into the system.
All right, so this is the main dashboard. You have, of course, the My Portfolio page, but in this demo, we will focus on the deal analyzer, yes? Yeah, so let's start. We can start with typing the address, and then we'll start to put the numbers and see the potential returns for the first year and then for the long term. So let's take the address. On our deal analyzer, basically what you need to put, you need to start with two data points. One is the purchase price, and the second one is the potential rental income or estimated rental income. So should we put this number as the purchase price?
Yeah, just use that for now.
Okay.
Right. And then we can, we'll tweak it after.
All right. Yes. So what would be the rental income for this property? The monthly rent.
It's on the financial statement. So here you've got monthly rental income, $5,224 with including coin laundry.
So what happened is just I put these two numbers, the purchase price and the expected rent, and already the platform calculated the first metrics and long-term metrics. And now from this point, we just need to tweak the data. So let's say the property value. So would you say that this is under market value or this is the current market value? Because if you think that the property
it's worth less.
It's worth less.
Yeah.
So you purchase it in a higher.
I don't think. No, I think the purchase price
it's been
will
on the
end up
market
being
for a little
lower.
while, and based on some of the comps, it's priced still a little bit high.
What
It's
would you
probably 1.1 to 1.2 is more reasonable.
So let's say 1, 2.
like this? Yes.
Yep.
Okay, so if you see that this will affect your first year ROI, okay, so basically
No. Sorry. Change the
What?
purchase price to 1, 2.
So this
And
was my
keep the
question.
value. And keep the
so-
value at 1, 2. Yeah, it's listed for 1,289, but we're not going to buy it for that. We're going to buy it for 1, 2. But it's still
getting-
worth 1, 2. It's not worth anymore.
Okay.
There's some comps that support close to that. Yeah.
Okay, so the comparables basically say that this is the current market value. That's fair. So we calculate the land transfer tax based on the location of this property. If you are a first-home buyer, of course, it will be a bit lower. So this is very important to take into account. And then let's see what other costs you will have when you purchase property. In terms of closing costs, what will the legal fees to purchase this property?
$2,000.
Title insurance?
$300. That should be included in the legal fees though. So sorry, that number includes title insurance. Yeah.
Okay. If you want just to the record to be more
Put
specific,
1,700 and then put 300.
yes,
Yeah.
do it like this. Have you had inspection costs to the property?
500.
Then the municipal land transfer.
So there's two land transfer taxes in Ontario.
Yes.
One is provincial, and then there's also a municipal.
It's in
one.
there. It's in there.
It's in there and it's been calculated already. And then are you going to do any refurbishment to this property or just keep it as it is? Or
Let's assume
furnishing?
that you got to go in there and make a few like repairs, but the place is tenanted, so you can't do any unit improvements per se. So I would say, $7,000 to go in there and fix a few leaky sinks and issues like that.
By the way, in case you do more work, you can just specify all the costs here. So if you want to add kitchen, so it's a great way also to audit all the items that basically combine the works plan on this property. So let's put 7,000. Okay, so this is important. So you see like the entire purchase costs are 1.25. So the entire purchase cost of course, are higher than the purchase price. So this is the total cost. So now let's speak about the balance between how much you're going to put in cash and how much you will take on a mortgage. So the maximum in the UK, we would put, maximum 75% loan to value.
Yeah, I mean, there's you've got an option to go like 80% loan to value. Now whether or not that's going to be a good investment for Toronto, just because if you're looking for cash flow and you're looking to get the property financed, what I would be recommending for anybody buying a triplex in Toronto, would be probably 65% loan to value.
Okay, so if we put 65,
Yeah.
so the rate, I think that's now around like 5% or even 6.
4.5, 4.8.
4.5. Okay, that's 4.8. Okay. And it will be principal and interest together, not just interest only. Yeah.
Yeah.
By the way, the UK, 90% of the mortgage will be only interest.
That's coming to Canada soon. You heard it here first.
All right. So this will impact, actually, this will impact the cash on cash, of course. And
Now it's looking more like a Toronto return.
Yes. So you can see that the cash on cash is very low, but let's see.
Cap's not bad.
Yes. The cap rate. Yeah.
Not bad.
Not bad. So this is the thing. So you will need to put, why it's 37% cash investment. It's the 37% from the total purchase costs.
Yeah. Closing
65% will be the lower between the purchase price and the property value. And the deposit will be 35% from the lower between purchase price and property value. But on top of that, you need to put the 50K for the taxes and the other costs.
Yeah, this is a typical property in Toronto. Right?
All right.
Because what you're doing is you're looking for appreciation, right? Especially with these type of small residential investment properties, you only got 3 units. This is something that you're always going to be looking at based on my experience in 15 years. This is what they've all looked like.
Which is a horrible way to invest if you're planning for appreciation. But this
if you want to
seems
buy more than
way.
one property, right? Like this is strictly just, someone wants to get that one property and they are going to hope on it paying off its mortgage. And then they're going to hope to get the rents up. And then over long term, it appreciates. And that's their performance. They're not looking at, how do I go and get more properties? How do I get qualified? What's the bank going to be underwriting my deals at so that they'll continue to lend to me? They're not taking that into consideration. And so what this app will do is this app will tell you, like, look, if you go and buy this property, it's great. But if your goals are to go buy multiple properties, this is going to be tightening up all those debt service ratios that they're going to be qualifying you at, and that this may not be a good rental property. Right. And I think that as the market's changing, people are going to be understanding that a little bit better and not just be looking at appreciation like on condos or these type of properties.
Well,
So
and if we go up to this section that just is at the top of the screen here, we can make our assumptions for the long term.
Yeah, but before that, Darryl, let's complete the monthly operating expenses on it, because this will impact the results.
Right.
So are you going to use a managing?
Gets worse, Darryl.
Gets worse, baby.
It gets worse.
We can't afford a management fee in Toronto, can we?
You got to manage that.
We got to manage this thing ourselves.
You got to
learn
manage
how
that
to
thing
fix
yourself.
the toilet.
0%.
Okay, 0%. The insurance.
$2,500. Well, there's a financial statement. Look at what they put on there. Go back to the financials. Insurance, they got 2,844.
All right, so
Per
it's
year.
around 240 a month.
Okay, that makes
Right.
sense.
Maintenance 1,200. So let's put it here.
$100 a month. That number was made up.
Right. So this is a utility.
Round figure of $100.
We have to add the gas, the hydro, and that. Yeah.
So this would be around 7,700, 7,888 a year.
You're the financial guy. You got to tell us.
He just did that in his head.
Yeah.
8 a year. It means I would say 750 a month ish. All right, and then the taxes are $4,000. So I would say around 400.
That's
This
annual.
is annually,
Yeah.
sorry. So I can just take this. See if you will let me know. 4882. All right. Now it's getting much worse. Okay.
Now it's looking more like
There you
Toronto.
go.
Here we
Yes.
go. Okay.
I'll
let's
buy.
see.
I'll buy.
So let's take our just the long-term assumption. So inflation is much higher. But
Okay.
the question is like would you keep this property for 10 years or more?
20 years. 20 years.
20.
This is a guy who says, I don't want to do anything. This is going to be just a property that I have. It's my one and only. It's my baby.
Right.
I'm taking money that I got from somewhere else and I'm just going to buy that one rental, manage it myself.
I would put 4% on inflation rate.
On expenses. Yeah. Rent
Um,
appreciation, 2.5.
All right.
That's the max.
2.5. You're not allowed to do 2.5.
No,
are
next
you?
year is 2.5. Yeah. That's the
Really?
max. Yeah. And
Wow.
property appreciation is 6.1% over the last
6
50
million
years.
years.
What about the occupancy rate? What is the rental demand in this area?
Should never be an issue. So 98%.
All right.
Yeah.
Okay. So now, if we look at the first year metric, and basically we will see also like the report in terms of the development of the cash flow. So you see that there is a negative cash flow. So every month you're going to lose $500.
Mm-hmm.
Now it sounds like a Toronto deal. Now we're talking.
But having said that,
With
you have
appreciation.
for over 10 years, you have 10% IRR. So what is the IRR? The internal rate of return. So it means that if you take into account the cash flow, you take into account the rent appreciation over the years.
Mortgage pay down.
Yeah, the mortgage pay down. Let's go to the prospect report. So I click on the prospect report, and then you will have this nice charts, okay? So you can see that the property value will go up, the mortgage balance will go down. So the equity will go up over the years. So this is like the amount of equity you will have on this property. And also you can see the cash flow is going up.
Yeah. So my cash flow.
And so this doesn't take
when do I get
into
to neutral? Sorry, when do I get to neutral? So we're at negative 500. Go to the beginning of the cash flow chart.
Yeah, so it's
we're at negative 6,000. Sorry. So when do we get what year? Yeah.
So after here,
there we go.
So 10 years.
10 years, you will start to get a positive cash flow, and then it starts to grow.
Yeah. So it's a dud. It's
brutal. Also, so it's definitely a long.
I'll explain one variable that will happen will be rent turnover. So
rent
those rents
turnover
we use,
for sure
2.5% because if the tenants don't leave, but they're way under market rents. And so literally your rents can double if you do some renovations and get one of the tenants out. So there's other little things there so I wouldn't look at the cash flow per se based on just this.
Based on the current.
Yeah,
but that also doesn't take into account whenever somebody does leave and you raise it more than 2.5%. And that's going to happen over 20 years, a whole bunch of times, right? But it also doesn't take into account when the market corrects and when interest rates go up like crazy for a couple of years.
Number two, it should be 2 Avalon.
When somebody doesn't pay for a year. Have you heard some of these stories out there of people that haven't paid their rent in like 3 years?
I got lots of stories, man.
How is that house not caught on fire yet by accident? Like what's going on?
Yeah.
How are people letting people stay for 3 years without paying rent? Okay, so this is good. Do we have another example? Because this one, I don't know, TK, are we pushing our client to buy this?
I'm not pushing my clients to even
not buying
look at this. Unless they're going to live in one of the units and, we get vacant possession and we're going to, make it right.
Where's the other one we did?
It doesn't make sense.
One second. One nice thing that you can do on Lenlord is just you can save this as a prospect property. Then on my portfolio, you can deselect the properties and then you can basically start managing a pipeline. So let's say that we analyze this deal. I will use the views button to change it to performance view. And then basically you can see the metrics, and then we can add more deals and then compare them.
So that's a property. So 159 Queen Street, Trenton.
Okay.
I feel good about this one, TK. I like Trenton.
I'm not going to say it's the best one I've ever seen.
Where's Trenton?
Trenton's east along the 401 towards Belleville.
Okay, I will click on the new button to start from scratch. This is yes.
Yep.
Okay. Purchase price was 499. Yes.
Yes. Ooh, I like it already, TK. 499. That's
We're
like
gonna, you know what, Daryl? The truth
one
is,
more zero, one more zero.
I don't know which one is going to be the better rate of return.
I believe
Yeah.
that you
This
do.
one.
I don't.
I
don't
believe
know.
that.
Yeah. So
Rental income.
$2,810 a month.
28.
2810.
10. That this, yes? This
Yep.
one,
Yeah.
okay. Now let's see the land transfer tax for this region. That's fine.
That's right. Yep.
Let's put there is no municipal land transfer here.
Nope.
All right.
So we'll do the
Legal
same thing. 1,700, 300, 500.
All right.
Great.
Refurbishment, anything?
5,000.
It's always something.
Something's got to.
Yeah,
The
yeah,
land.
you
The seller's hiding something.
Buffer.
They didn't tell you about something.
Okay, this looks good so far, but wait, this is the interest
But
only.
wait, this is an all-inclusive rents.
All right.
Yeah.
So first I would change this to principal capital. Let's take 65% loan to value. Or
You know what? In Trenton, you would be looking at 80%.
Ooh, that'll help.
this would
It's the
change it.
reality of that market that somebody would be looking to try to find a 20%
All
down
right.
deal.
Okay, so it means that you need to put down 113. Okay.
Mhm.
Actually, there are also the like mortgage fees. I think that we should also take into account. Not sure how, and mortgage insurance as well.
No mortgage insurance. Generally
okay.
speaking, on a lender, there's no mortgage fees either.
Yeah, leave the fee at zero.
Yeah. Yeah. So we're assuming that
we're
the
assuming
rates, those are all
Oh.
A lender rates, no fees.
Managing agent.
So now it's out of town, right? So you're a local
Now
Toronto
you're gonna
guy,
go.
you're going to pay 8% management fee.
8%. Okay, let's see if we have insurance 2,400. It means
Wow,
200.
how did they get all their expenses to be
Even numbers?
even numbers?
They stop
Maintenance
using them once they hit 3,000.
around 40.
Just throw this one out.
Utilizations 5, 6, 8. It's around 6, 5, 5, I would say. And
Who do you think the winner is going to be, Daryl?
Trenton.
Which you think Trenton's going to be the winner? Because I'm going to have a curveball here on that property appreciation rate.
We'll see the results soon. So
You
let's
can't
see.
manipulate it. Like you already
I'm not
went
manipulating. I'm
80%
giving
on this one.
my honest opinion on how we should enter this data. And I would use the 6.1% in Toronto, but I wouldn't use that rate in Trenton. And the management fee wouldn't exist in Toronto, but it would exist in Trenton. So
What
And
we
the
did- what we
curveball,
did,
TK, what is the curveball?
rent
the-
appreciation, we're going to do 2.5%. Okay. Because we want to try to assume that these tenants never leave. They are legacy tenants. Inflation rate will remain the same. Occupancy rate is going to be a little bit lower there too. I mean, 96%.
All right.
And
There
then
is only 1% property appreciation over the year?
no, I would say appreciation rate should be 4%. And I'm being generous.
And 20 years.
Trenton. 20-year again. Yep.
Okay, so these are okay. So this is still like the
Oh, I was wrong.
cash flow is
Surprise, surprise. Buying a house in Toronto, negative cash flow is really not that much different moving to Trenton. It used to be a little bit better, but as we saw that urban sprawl over the last couple of years, we're noticing that places
Hold
out
on.
in these.
Are we paying $499 for this one, TK? This is just the asking price in fucking
True.
Trenton.
So let's good job, Daryl. Let's
Thank you.
drop that purchase price to 400,000.
There we go.
Yeah, let's drop that price to 400,000.
and the value
400,000. Yeah.
Probably less.
All right, so it reduces the negative cash flow, and you
Ooh,
can
But you
see
only have to put 20% down. It's less of an initial investment, and you're neutral cash flow, relatively speaking, because you can find some efficiencies here and there, and maybe raise rents day one, that kind of stuff.
if you reduce the loan to, if you take, yeah, if you, the loan will be a bit
If you go to
lower,
65%, yeah.
yes, then it will take you immediately to a positive cash flow.
Yeah. Okay.
how much more do you have to put
I
down?
think also you need, yeah, 150.
So an extra 40K.
40K gets you $230 a month.
Yeah, exactly, right? All
Well,
right.
but
And then
imagine if you had to make a new spreadsheet every time instead of inputting like these 10 things. Like you could really analyze the crap out of a lot of deals a lot quicker with this, couldn't you? Couldn't
Yeah,
you, TK?
absolutely. And imagine if you were debating, do I go for appreciation or do I go for cash flow? Do I go and buy that property out of town that is not going to appreciate as much, but I might, not have to take money out of my pocket? Or do I commit to taking money out of my pocket and buying a property in Toronto because I know that that's going to appreciate more? And this might help you make your decision, because I think a lot of people thought the Trenton property was going to be better, even at $100,000 discount on the asking price.
It did
The
nothing.
Toronto property still gave you a better return over the next 20 years because of that appreciation, right?
I love it.
And
And
rental
the- and-
appreciation too. We only use 2.5% for both. I'll guarantee you the rents go up more in Toronto than they do in Trenton over that.
We're gonna
same
have
time
to do
period.
this again. We're gonna have to find a place that it friggin' works somewhere around here.
By the
On
way,
these-
something that a nice feature is that you can just use this scroll down, drop down, and then let's go to
Pick the property that you analyzed
yes,
already.
if
Yeah.
you want us to see it and like
Compare them,
one
yeah.
by one.
Yeah, compare that one with Avalon, like, right, just exactly. I love that. Yeah.
And
Uh,
then so you can take this now and you can create a report that if you found something that you liked,
yeah,
you could put
export
this
it.
out to your lender or your partners or
Yeah.
whoever
Yep.
needs to see it. And
Yep.
boom,
Yeah.
you've got like a really well done,
Check
professional
out this deal I got. Yeah.
looking, amazing, detailed analysis.
Yeah.
Yeah, you can send it over and ask people to review, like absolutely.
Love
I
it.
love it.
Love it. Okay, so here we go. That was amazing. Thank you for the demo. We know that you
Thanks,
are a
Avi,
busy
yeah.
man, and we know that TK is an even busier man.
Oh, please.
TK's got a hot lunch date today, so we got to wrap up. It was a pleasure having you on the show. Thank you so much.
Thank you very
Likewise.
much, Avi.
Pleasure
This is great.
to be here.
Thank you.
And,
Thank you for
Only the
sponsoring us.
beginning, okay? Only the beginning. We got lots of stuff on the go.
yes.
Users
And
are
yeah,
growing.
I encourage the listeners, the audience, to anytime you need to analyze deal, just go to Lenlord. You can create a free account, and just for this sponsorship, we will promote 3 months of free for the premium plan that we have. The premium plan, by the way, is great if you want to link your bank account, and then you can track the cash flow of the existing properties. So
Nice.
then you can get a feed and just allocate the expenses and the income to each property, and you can manage also the rents. But this is perhaps we can do another
We
demo.
can do this another time. It's crazy.
Yeah.
Like TK, I get emails all the time saying like this is due or the rent is due or this bill is due. It's really comprehensive and really, really amazing. So once again, thank you, sir, for joining us today. Thank you for your support sponsoring the show. I have a feeling that this platform, we're going to start seeing Lenlord everywhere really soon. Because this thing is hot.
Yeah,
Thank you so much.
Thank you very much, TK. Thank you very much, Darryl.
Okay, Abby, have a great
TK,
day.
enjoy your lunch.
All
Okay.
right.